Hello friends and traders, Nalinakshi Swami here. Today I am going to talk about the topic of inducement and liquidity. How inducement leads to liquidity and how it is helpful for the big institutions. What do they do actually? How it is been done. For example, inducement is the meaning of the inducement is the thing that persuades or leads someone to do something. What is that thing which is persuading retailers to do something, to go long or go short? That is the thing I am going to do that. When this inducement is happened, you try to take the position, retailers get trapped. How do they get trapped? Where are those levels they get trapped in the market? For example, all of you have studied about what? Trend structure, and you know about trend lines, patterns, and then equal highs, ranges, channels, everything. These are the areas. See, we have been taught from gurus to take position if something breaks above the structure. So that is the positive structure. So that structure will induce us to take position, retailers to take position. So after taking the position, you will be amazed to see that the price comes back and hits low and goes below that level. Then you will be out of the game. That is liquidity. So big institutions create a structure as if the price is going to go up. So the price will go in a big price movement. That is an inducement. You get induced by seeing the big candle, and you will place and buy order above that candle, and you will be amazed to see price is coming back and hitting down. So what are those areas where one should be careful? I am going to discuss few things. For example, this is the trend structure. This is the trend structure, high, higher low, and higher high. So this is the break of this structure. So when you see the break of the structure, you consider as, this is the BOS, break of structure. So you get delighted, all the traders, all the people in the market, they will start telling, yes, this is price has broken up and it is going to go. It will not go like that, like this. It is the break, the structure. So what you do? There are, in retail community, there are two types of traders. Breakout traders and breakdown traders. And this is the range. Market has created the range. So here, double top, and the price has broken out of this range. So retailers jump in, and then what happens? Price comes back and goes below this low. You have seen many times it is happening. goes below this low, not hitting this low. Okay. So here, whoever jumped here, as where he will keep the stop loss? He will be keeping the stop loss beneath this, beneath this area. So liquidity comes in and liquidity grab happens. And also sometimes now liquidity has been, they have achieved their target. They induced what? Induced retailers to go long, and they got the liquidity and grabbed the liquidity. And then now what happens? They come back and go below this low, and whoever the breakdown traders who wants to trade, breakdown trader, they will jump in, keeping the stop loss over here. So the liquidity, they induced the retailers so that it is going to go low. And liquidity, whoever gone short, they will keep the stop loss orders over here above this level. So it pierces through this level, price gets pierced through this level, and amazed to see it hits back. It's back and it cleared the liquidity. Liquidity grab has been taken place on the both the sides and it goes. So these are the, so that's why patterns are created. W pattern, M pattern. So these are the patterns, even the M pattern, W pattern, and double tops, double bottoms are the areas where liquidity grab will take place. So the inducement, this is price inducement. Where it will induce? Actually, these are the areas near the support, near the resistance. They will induce by pushing the price up or down and create, then later they will create the liquidity and they will achieve that, motive, and they will go in the direction where they want to. So let me come to this is the inducement and liquidity. Let me go to the chart, reset chart. Okay, let me take out this indicator. Here, what has happened in Cipla, just an example I'm taking. In Cipla, what happened? This is the break of structure. Double top, price has broken down, and can you see the imbalance over here? Price has not been traded over there. So it's a huge candle. The big player has pushed it because he has grabbed the liquidity. He has grabbed liquidity in this area. This is the area. This was the area broken down, grabbed the liquidity, and again came down. You can see these are the areas. This was the range. Price has double top. You can see here, double top. Push the price high up, break out of the structure, and then pushed it back. Pushed it back, and then he has gone above the break of the structure. Now you can see the imbalance over there, and this has been induced. Actually, retailers have been induced to take the position. See, usually retailers will be very late to take the position. They will go long in this area. in this area. Okay. So after the inducement, see, price went up and it came down. Here, it broke the structure actually, broke the structure. And if you see the levels here, these are the levels, breakout level. So he didn't stop at this, he didn't come to this level. So he induced buying again. The people who have seen this big candle breakout structure, they have entered here. It has been liquidity. I mean, they have been induced actually by showing the green candle. And then next, price has gone up. You can see the break of this level, break of this range. And price hit there and did not go there, and price is all the people who had gone long here holding the position, they have lost it. So now it is coming back. Now it is coming. Where is the liquidity sitting over here? Liquidity is in this area. Liquidity is in this area. So price may come, he may push the price beneath this. Many times you might have seen this. Price get pushed over here and then to induce the sellers who think it is the break of the structure, and grab the liquidity and it will go up. That is the play which is happening throughout in the market, throughout in the different time periods, time cycles, even in the intraday, you will get it. That's what happened in Nifty. I'll go to the Nifty chart, index chart. What happened on the how the liquidity played into this? Even for the bank Nifty, many people thought by seeing the red candle. See, if you just concentrate on this area, what happened? From this area, price gapped up. Next candle was the red candle. So people thought it will go down and hit this level. He halted here. The play is between this range. This is a gap and this is the range. And price went up and they induced. This is the breakout of that level. And then price came back, again pushed it up, could not go past that level. Again, the price came down. So this is the area liquidity in the induced sellers. See, this is the level, short sellers, induced short sellers. See, you can see the price in the opening bell itself opened here and made a low. So all the short sellers have been induced and they grabbed all the liquidity and then price started moving up. Here in this area, what happened? See, this was the another range, breakout of structure, all were happy, it will go down. It was an expiry day and the price came back. Now, this is the playground now. This is the liquidity area. liquidity area. Liquidity. So price came back, hit, and here it has, price pushed down, and price amazingly with big movement. You can see big movement, price has gone. Now, where is the level? Level you have to see for that. This is the area order block. You can see this area is an order block, from where price has returned, fallen drastically down. So this is the area, crucial area, fallen drastically. What they can do? What they can do? Either they can go past this level and induce all the retailers to go long to hit this level, thinking that all will, because it is a range actually. This is a range from where it is hitting that range. From this area, price has fallen down. Everybody says that. So they will induce all the retailers and to go past this level. There is a level over here. This is the flip level. Flip level where the price, they have induced all the players to grab the liquidity, and they have come down and they have not gone to this level. Now, this time, probably they may go past this level. They will induce all the traders. All the people will get induced. Actually, they will see it as a break of that level, double top, and they will go long. And they will hit this level, and they will achieve their liquidity. Liquidity grab will take place. And then price may even come down. You never know. They may push the price down to this level. This is the play which is happening in the market on and on. So one should be careful while taking the position. See, suppose if you want to see in this, for example, if the price is coming down, you should see for the trap on the upside. Trap on the upside. If the price is going up, you should see for the liquidity traps on the downside. Now price is going up. Let us see what it does, where it will hold. You wait for that level and see for the trap, and then you can take the position. That's how you can look for the liquidity and inducement, and where are those areas where the inducement takes place. Actually, inducement is done. You can see the inducement over here clearly. This is the range. Price has been pushed down. Below this, they have induced all the sellers. They grabbed the liquidity and price has gone up. Same thing here happened. Here, price has been pushed down and they grabbed the liquidity and the price has been pushed up. And again, it came down and it is now, it is going past, see, it is near this level. It has come to this level. What is that level? 17,869 we need to say. See, because it has crossed this level, double tops. You can see many double tops over here, 17,555, and here also 589, and this is the multiple touches, and they have to cross that level. So inducement has taken place on yesterday. That is already, that is the Friday. Price gone above the 17,740 and closed at the 17,730. Now this is how liquidity grab and inducement takes place on and on in the market. One should be careful. One should be careful and look for the liquidity grab areas and take the position. You will be with the big man. That's what I want to say about this. Thank you very much, traders, for listening to me. Nalinakshi Swami signing off.